Hi everyone, Brian from Bearable Traders here. Happy New Year. It is January the 2nd, Monday. We've got the long weekend going on because of the New Year. And I hope everyone's had a great holiday season and ready to get back at it all refreshed and ready to go on Tuesday morning, this shortened trading week. So let's get down to looking at what happened last week and look ahead, see what we got coming down the pipe. Okay, so let's start out by looking at what happened last week. In fact, let's jump back and just take a look at the whole year in retrospect here. Of course, this was the worst market performance since 2008. The Dow was down only 9%, the SPY down almost 20%, and the Qs pretty much lost almost a third of the value there. So pretty bad performance on 2022, so we're definitely hoping for a better 2023 for the bulls. And last week, pretty much the theme was, rate hikes. Fed continues to struggle to get inflation under control. And of course, whether we're going to dip into a recession here in this coming year or not. So that's going to be the continued theme as we go through 2023 or start off 2023. The indexes overall, we just finished slightly down on the week. It was kind of a quiet week, shortened week as usual between Christmas and New Year's. And what areas of strength do we see? Of course, energy just keeps popping up there. Energy, again, strongest sector for the week. Financials, second most strongest. And on the downside, consumer staples and healthcare were the largest losers on the week. So the 2-year Treasury was up a little bit, 4.41. The 10-year was up at 3.88 went out the week, which if you look at it, it's actually starting to close the gap between the 2-year and the 10-year. They call that an inverted yield curve, but that inversion is starting to reduce, which is kind of interesting and something to keep an eye on because as the 10-year goes up, maybe the bond market is suggesting maybe the risk of recession is dropping. So the 10-year. So anyway, the dollar continued to weaken, down again 0.6 as measured by UUP. And Bitcoin just seems to be just leaking a little bit here as the weeks go on. It's down at around 16,600 last time I checked. So Bitcoin not really catching much of a bid there into the last trading week of the year. And as always, before we get going here, I always like to take a quick moment to plug my book, which is on Amazon, Profiting as an Active Trader, Rules, Strategies, and the Routines of an Active Stock and Options Trader. So there it is, if you want to check it out. New Year's reading. And let's get into looking at some charts. Start by looking at some of the indexes. You can see here, always like to start out with the treasuries. Let's see what they're doing. We're pretty much kind of flatlining, or have been flatlining weekly. On the 2-year, got up to this sort of 4.4, 4.5%, and really haven't been moving very much on the 2-year. It's where the Fed's, I think, target rate is somewhere around 5%, but we're a little bit under that still. On the 10-year, we have been creeping up a little bit on the weekly. You can see here we bounced off this moving average again, as we did back here, and as we did back here. So it looks like it's moving up. But the interesting thing is that it is starting to close that gap between the 2-year and the 10-year. It's certainly less than it was a couple weeks ago. So the transports, you can see here, we really didn't do a whole lot during the week, and that's sort of reflected on the weekly chart, down a bit, but not much movement after this big pop-up. I believe that was FedEx earnings. But anyway, that's transport's always an indicator of economic activity. And the Dow, you can see we actually just finished a little bit down on the day on Friday. But again, you can kind of see we're very range bound, and moving average is sort of converging. The Dow a little bit down on the week, but not very much. Again, sort of the reflection of all the indexes here, down a little on the week. The Qs, bit of a bounce here. We do seem to be finding some support at this level, around this 260 level right here, and we'll be watching that level. If we fail, 255 is the next level, and things are looking pretty oversold. We do seem to be curling up here, so maybe we'll get a bit of a bid next week going into the new year with some optimism. Weekly, you can see here down a little bit, well off the low of the week, so kind of a positive candle there for the bulls. The SPY, again, really just range bound here for the week. Again, it was a low volume week because of the Christmas New Year holiday and holiday season. And you can see here on a weekly, again, well off the lows of the week. So, but again, volume extremely light, and of course reflecting a 4-day trading session as well there. And IWM, again, range bound, and sort of common theme here, well off the low of the week. We do seem to be trying to hold a level here. And again, we'll be watching for that. There's a number coming up. Payrolls number is coming up at the end of the week here, which I think everyone's going to be watching to see if employment is starting to tick up a little bit, which will be positive for the bulls in this market. Higher unemployment rate will indicate maybe the economy is weakening, and the Fed will become a little more dovish. That's the theory. So anyway, volatility, which is kind of interesting, despite the fact that we've been down a lot. The volatility index just keeps sort of running along the bottom here. There isn't really any high fear in the market at this point for a big sell-off from where we are now. The dollar, just you can see here how weak. We put in a couple tops here, some lower highs, I should say, and then we've just been leaking off as the other currencies have been strengthening, like the yen and the euro. And you can see here on the weekly, we really just broke this trend significantly, and now we're back into an area where there should be some support. You can see a lot of volume here, a lot of congestion, some gaps in this area. So this is an area I would watch to hold. If we continue to see weakening, it'll be good for emerging markets and stuff like the gold stocks. Again, Bitcoin just seems to be kind of 16.5 to 16.8, seems to be stuck in a bit of a range here, not going really anywhere right now. And what have we got on watch here? These are stocks, actually, some of them I'm holding. I'm holding ATVI just for this Microsoft buyout. And I've been trying to sell some calls against them, but they haven't been successful yet. The buyout price is around $95, which is even above this level here. So be nice to be able to, if I can get a fill at a decent price, nice to be able to sell some calls against my position, and that will kind of hedge my bet if it doesn't go through. But I'm kind of thinking, I'm betting it will. It's not a large size, so I don't like to bet on binary events, but kind of feel like this is a fairly good bet, or at least the odds are in my favor anyway. Cal-Maine Foods, they reported last week, big gap down. People feel, I guess, the egg prices have kind of topped out here. There's been some avian flu issues with a lot of the herds that had to been killed, so egg supply has been down, which has, of course, pushed prices up. So we came down here to this 200-day moving average. I bought some back here on Thursday, I believe it was, around in the 53.5 range, and I'm just looking for a bounce back here, because this area has been a pretty significant area of support, and this is the 200-day moving average. So if it fails to there, I'll have to stop out of it, but I'm looking for a bounce back here. Maybe another 7 or 8% move would be nice. Flex, I'm still holding. It broke out, checked back, broke out again. I'm still kind of holding it because I think it's still got some possibilities here. Gold, I'm keeping an eye on. As I mentioned, the dollar, if it continues to get weak, this will be good for gold. A lot of analysts and stuff are coming on saying gold is a place you should be. I do have a little bit of a gold position on now. Rogers Communication, been in this for a while, since it really sold off back in this area. And there was an announcement on Thursday about them allowing a merger with Rogers and another company, Shaw. So it spiked up, and really I'm out of this now. But really nice run on this oversold condition. So that's really where the swing trade opportunities are, is just, sort of waiting and watching for these oversold conditions, opportunities. Tesla, I mentioned this last week, possible bounce, really getting oversold here. You can see all these moving average so extended, especially on this gap down. This bounce, I would be careful of, as we do have car Q4 numbers coming out this week. And I think Tesla is going to report lower numbers. And in fact, I got an email from Tesla asking if I wanted to buy one of their cars, and they were going to give me a credit of $5,000. So the anecdotal information, but if a company's emailing you telling you they're going to give you a discount on their car, a new car, and you could take delivery of it right away, that tells you something right there. So a little bit, and it's probably reflected in this price already. So anyway, just be careful with this. It's still in a downtrend, even though we've had a nice bounce back. Energy has been strong, as I mentioned already, and I'm long some XLE now, just because we've had just a couple of, it just seems to look like it's ready to break out here. Sort of an ascending triangle, if you want to. There's your top, and there's your, higher lows, and it just looks like it's going to break out here, and I'd be watching for that early next week. So let's just wrap things up here. January 3rd, what we're looking at this week, you can see here the indexes, as I said earlier, they really didn't change much from the previous week. We're just down a little last week. So support and resistance levels pretty much have stayed the same. On Wednesday, we do have the US PMI, so it'll be interesting to get a read on manufacturing, this manufacturing index. Friday is the day where everyone's going to be watching for those payroll numbers and the unemployment rate. It'll be good for the market if we see an uptick in unemployment rate. Flat or down will again lead to a more aggressive Fed in terms of hiking. So we'll be watching that number on Friday. The other interesting thing that's come out, it's not really an economic event, but it is a report by the car companies. They'll do their delivery numbers for Q4. So you'll take a look at all those. That could lead to some volatility, especially Tesla, which has had just a horrendous sell-off over the last couple months here. And we'll see, I think their numbers are actually supposed to be lower. They're going to report lower numbers than expected. So we'll see what those numbers come out at this week. I don't have some times or dates for those. On Thursday, this is the only really earnings that are of any interest. Walgreens Boots, you've got Conagra and Constellation Brands. Not typically big movers, but it's a pretty light week for earnings. But we are closely approaching the beginning of another earnings season with the financials kicking things off as usual. So we'll see what happens here as we get closer to that. But that's coming in the next couple weeks, another earnings cycle. So that's it, everyone. Hope you had a good holiday season, I have said, and ready to rock and roll on as we get going here. And we will be starting off live on YouTube, Bear Bull Traders, 8 o'clock, Engineering the Markets, and then, of course, pre-market show at 8:30, and then, of course, Trading the Market Open at 9:30 with our members. Enjoy the rest of your time off, what little there is left of it, and we hopefully will see you tomorrow. Bye for now.